So you'll be reacting to 2 days worth of data when we come back, 2 days worth of market reaction as well when we come back on Monday morning. Ravi Dharamshi is with us. He is our market master of the day, chief investment officer at ValueQuest Investment Advisors. Ravi, good morning. Great to have you with us here. Thank you very much for your time. It's been a while. So good to see you back on the program. Ravi, broader markets are kind of, seeing a little bit of pressure, a little bit of pause. We've kind of seen sort of the market regulator SEBI expressing, and their words, calling it some froth in the market. RBI, of course, also coming in a different way, very specific instances. It's not a broad kind of brush. But many are taking this to mean that the regulators want things to kind of cool down a little bit. It's just too hot. Is that the way you look at it as well? That is one, from how you perceive some of this action, and what's the course ahead in the near and medium term for broader markets, mid and small caps. Go on, Ravi.
No, I think both the regulators are doing a fantastic job of anticipating which could be the possible trouble areas. And I would say it is much required. And if we can cool down a little bit in those areas right now, maybe the cycle can continue for longer. But of course, see, whenever you paint something with a broad brush strokes like mid and small cap, mid cap is 150 companies and small cap is 250 companies. So obviously, it's not like every company in that basket is going to suffer necessarily. There are going to be some companies where performance will still uphold the valuations. So, and valuations are not necessarily the only reason why markets can fall. I mean, it's a prerequisite, but it's not necessarily a sufficient condition for the market to come down. So, outlook remains good, and we have just seen that one of the RBI, which is one of the most conservative regulator, and they have upgraded their numbers and they feel India will grow closer to 8%. So that tells you that there is a lot of buoyancy in the economy. And in a rising economy scenario, the spoils tends to be shared by more and more number of companies. So it's a natural phenomena that more companies will do well. So from that perspective, on one end, you're saying economy is doing well, and on the other end, you're saying a mid and small cap, there is a froth. It's not totally unjustified. There will be pockets where there will be some fun and games. So it's good that regulator is stepping in and kind of cooling down things.
All right. Ravi, what are your thoughts on some of these themes? What is it that you're liking? What is it that you're avoiding at this point in time?
So, see, the challenge in the market is that themes are pretty much well recognized. It's not like there is any particular theme that nobody has ever looked at. So you have to go with one that is facing some cyclical challenges. So consumption is one space where we are facing some headwinds since last some time, and numbers have been really deteriorating. Chemicals is another space where the numbers have been disastrous in the last few quarters. Now, I'm not saying that this is necessarily the space where one should be investing, but I think the relative valuations are starting to get attractive, and probably the worst of the performance is starting to get factored in. So these are the areas where one should probably start looking, is what I feel.
I think we've just lost that line. Yeah, sorry, Ravi, continue. We lost you for a bit over there. You're saying that consumption has underperformed. Are you suggesting that you will start looking at that space now?
So, as I mentioned, that performance might be bottoming out. See, it's an exact timing nobody is able to do, but I feel valuations are starting to get attractive, and consumption remains a longer-term theme in India. It cannot be written down. If we are to go to a $5 trillion economy, our disposable income, our per capita income will rise to $4,500, and at that level, the discretionary consumption boom in India will really be going hammer and tongs. So, in anticipation of that, probably next 6 months are a great time period to be looking at some of the consumption bets. So it's a little bit of a contrarian bet, and we could be early right now, but I feel that that is the space to be looking at.
So consumption, are you going to stick with discretionary? Or would you play rural? Because it's all very confusing. I mean, even in rural, two-wheeler sales have been going through the roof, but your typical FMCG has been underperforming. And then there is discretionary where stocks have already run up. I mean, look at what's happened to real estate stocks, for instance. So what part of consumption would you play, and through what sort of companies?
See, the hockey stick growth can come only in the discretionary side. On the staples side, it is difficult for us to witness this whatever 5-6% growth going to 10-12% growth is very, very difficult. Also, it depends on the penetration of that category. Something like toothpaste has 70% plus penetration. We are not going to see a huge jump over there. So as we move up the hierarchy of needs, more spend is done on experiences, services, goods and luxuries that were beyond our reach earlier. So naturally, we will the premiumization story and the higher value products where the discretionary spends are the ones that will benefit disproportionately going forward. So we would continue to look at discretionary.
You're bullish on financials. What is it that you like out there? Is it the PSUs? Is it the private large banks? Is it the NBFCs? What is it that you like?
So as I mentioned, the challenge is that whatever we like and where the tailwinds are strong is already identified by the market and is kind of priced for perfection, if I may say. So finding an opportunity where you can generate alpha in those spaces is challenges. So whether it is capital goods, manufacturing, some of the capital market beneficiaries, those are all going very, very strong. And where the opportunity lies, there are obviously some headwinds. So those headwinds still need to play out and valuation still need to correct. While where the tailwinds are there, some amount of maybe further overvaluation cannot be ruled out. But so that is the scenario that we see ourselves in. What is well recognized might get really overpriced going forward.
Ravi, there's a lot of activity in the SME space as well, right? And there are lots of good companies coming up as well. And you're bullish on renewables as a space, as a theme, right? That's the big bet: electrification and renewables. And there are lots of ways to play it now. A lot more as compared to 2-3 years ago. Do you remain as bullish there? And have you done anything new if you can share with us?
So what I'll tell you is that, this space is still very much in its infancy. The sector is just getting born. The energy transition as a theme is likely to last decades, not next 1-2 years. So from that perspective, these companies are still very, very small. Having said that, there is hardly any representation in the public markets of these companies. So the action right now is probably more on the private side or companies that are now looking to get into the public markets. So challenge for a lot of these companies maybe about 18 months back was that IPO market had completely shut its door. So when they wanted to do an IPO, they could raise funds. So some of these companies did a private round. And that now rub off is obviously that now the public markets are also doing well, and there is exit available for anybody who wants, or there is ability to raise funds in the public markets is far, far higher. So some of these companies will come to the market, new sectors will find representation in the market. And that I think is a really exciting space from that perspective. Surely valuations, we will have to see case by case. But new business models do excite us because they don't have representation on the public market side as of now.
Have you participated in the sort of rally in NTPC, BHEL, Power Grid, and the other stocks, the traditional, largely thermal coal power stocks?
So without naming any particular company, so we do like the energy transition theme, and in the energy transition theme, our preference lies more towards power equipment and shovel sellers. So our hypothesis is if there is a gold rush, always back the guy selling the shovels. So that is why we focus more on the equipment providers. So energy, power transmission equipment is one space where we really believe that in next 5 to 7 years, there is going to be a major boom. And we are definitely going to stay invested in that particular space.
Ravi kept saying that he's looking at newer business models more than anything else. And this is publicly available information, Ravi, that in the last 1 year or so, the purchases that you made included the likes of CMS Info Systems. There was Zaggle prepaid stock that keeps hitting new highs. And then he liked the chemical space as well. So there's Ami Organics, which was there as a large trade disclosed, purchase as well, and Blue Jet Healthcare. Your thoughts on these, names / themes.
Actually,
This is-
Zaggle, I'm very interested. I mean, when it came, I remember I spoke to the company the day the IPO was opening, and I said, well, it was like Sodexo, but it's now, I mean, slowly you kind of realize it's actually a lot more. I mean, it's a lot more in terms of what they do. But
Ravi, CMS and Zaggle in particular, I mean, this is publicly disclosed information that is there.
No, as I mentioned, I will not be able to speak in particular about any company. But what I can say is that these are all our investments, and we continue to hold them and like them. Some of these are beneficial, we already mentioned, like chemicals is a space where we believe that pain is probably a couple of more quarters, but going ahead, the space continues to look good. Also, fintech as a space sometimes it seems to be in trouble at this point of time. So there are very few profit-making fintech companies out there. So Zaggle actually is one of those few profit-making companies in this space, and it is not in the lending space. It is more, at the back end of helping the banks in the customer acquisition for the credit cards. So from that perspective, it's a fee-based model, it's a SaaS-based model, and pretty much immune to whatever has been happening in the space. So, I mean, without giving any kind of a recommendation, but these are spaces where we are invested and we continue to like them.
Okay. All right. Ravi, great to have you on the show. Thank you very much for joining in and giving us perspective on the market. The market's absolutely flat, actually.